Let's talk about silver for a moment. In 2025, silver shocked a lot of people. Prices surged more than 140%. At one point, silver was even more expensive than a barrel of oil. That's something we haven't seen for decades. I'm Dr. Z, a university professor and a long-term investor. I started this channel to share what I know, what I have learned, and what I'm still learning, so you can make better financial decisions. So, the natural question is silver poised for a major breakout in 2026? Or are we seeing early signs of a speculative frenzy? Now, in this video, I want to walk through this calmly and clearly, looking at the fundamentals, the geopolitics, the rising industrial demand, and just as importantly, the risks most people don't talk about. Before we decide where silver might be headed, we first need to step back and understand what silver is really about and why it matters more today than most people realize. Silver isn't just another shiny metal. It plays a dual role in global economy. First, it is a precious metal, like gold. Silver has been used as money, a store of value, and a hedge against uncertainty for thousands of years. When investors worry about inflation, currency debasement, silver often comes into the picture alongside gold. This is the part most investors are familiar with. But silver is also a critical industrial metal. And this is where things get really interesting. It's one of the best electrical conductors on the planet, which makes it essential in electronics, circuit boards, smartphones, and virtually all modern computing equipment. As the world becomes more digital, silver quietly sits inside the infrastructure that makes it possible. It's also critical for solar energy. Each solar panel uses silver in its electrical conducts. And as global solar capacity grows, that demand adds up fast. Silver plays a key role in electric vehicles, charging stations, and advanced automotive systems, not just for efficiency, but for reliability and safety. Increasingly, silver is being used in data centers and AI hardware, where performance, heat management, and precision really matter. In many of these applications, it can be easily replaced without sacrificing quality. Historically, silver has always lived in this middle ground, part investment asset, part industrial input. What made 2025 unusual is that both sides accelerated at the same time. Investors were buying silver for protection, while industries were buying because they had to. And when both demand sources surge together, prices can move powerfully. That's exactly what we saw last year in 2025. Simply put, 2025 was extraordinary for silver. Silver reached record highs and delivered its best annual return since 1979. This is not a normal market move. Here is a quick comparison of major metals in 2025. Look at this table. Silver clearly led the pack, dramatically outperformed both precious metals and industrial metals. Gold had a very strong year, up about 60 to 70%, but still roughly half of silver's gains. Platinum also had a breakout, while copper, a core industrial metal, rose more modestly. We also saw unusual price relationships. At one point, silver became more expensive than a barrel of oil. a rare signal of strong demand pressures. Strong past performance doesn't guarantee future results, but moves of this magnitude usually point to deeper forces. Now, to understand silver in 2026, we need to look at what drove this rally. The first and most important driver is industrial demand. Industrial demand now accounts for roughly 59% of global silver use, nearly 6 out of every 10 ounces. In 2024, industrial fabrication hit a record 680.5 million ounces, driven by solar, EVs, electronics, and other technologies. Most forecasts suggest 2025 stayed near the historic level, and projections for 2026 indicate demand will remain high or even grow as these industries continue expanding. This isn't speculative. It's tied to how modern industry works. And because silver supply can ramp up quickly, mining growth is very slow. And most silver is produced as a byproduct of other metals. And this creates a structural imbalance that puts upwards pressure on price. So, industrial demand is pulling silver higher, but the supply story has another layer, right? So now let's consider another key driver. China recently restricted silver exports. While it only mines a small portion of global silver, China refines and processes a large share of what actually enters the global markets. Estimates suggest roughly 60-70% of globally traded refined silver now requires Chinese export approval. When a dominant player controls both production and trade flows, policy changes ripple worldwide. China's approach mirrors its rare earth strategy, restricting exports to gain geopolitical leverage. Less available supply outside China, combined with inelastic mining production, creates a structural setup that supports higher prices for silver. Structural deficits, when industrial demand outpaces supply, are precisely what drove silver's strength in 2025 and continue to matter today. Financial markets and investor psychology also plays a major role. Interest rate expectations, especially potential Federal Reserve rate cuts in 2026, reduce the opportunity cost of holding silver, making precious metals more attractive. Safe haven demand remains relevant as global uncertainty like inflation, currency volatility, geopolitical tensions encourages investors to allocate to silver. Silver tends to be more volatile than gold. That means higher potential returns, but also higher risk. Macro conditions like a weaker dollar, persistent inflation, and portfolio de-risking trends further shape investor behavior. In 2026, silver sits at the crossroads of real-world demands, constrained supply, and macro financial forces, a combination that investors can't ignore. So, what does this mean for investors? Here's my perspective. On the optimistic side, silver has a strong structural support. Persistent deficits, high industrial demand, and China's tighter export policies all reinforce scarcity. Even as mining slowly expands, supply can't respond quickly to sudden surge in demands. Momentum and technical breakouts can amplify these fundamentals, driving sharp gains at times. But at the same time, silver remains volatile. Sharp pullbacks can occur if speculative enthusiasm cools, bubbles deflates, and ETF flows shift. These swings are part of the market and reminds us that opportunity always comes with risk. If you're considering silver in 2026, the key is to stay thoughtful and measured. Physical silver provides long-term security, while ETFs, mining stocks, and futures each offer ways to participate with trade-offs in liquidity, leverage, and storage. Focus on your own risk tolerance. Keep positions reasonable and diversify. Don't chase headlines. Base your decisions on real market dynamics. This isn't financial advice, but I look for situations where supply-demand imbalances, macro factors, and investor sentiment converge, and I act thoughtfully, weighing opportunity against risk. To wrap up, silver in 2026 sits at the intersection of strong industrial demand, constrained supply, and significant macro and market forces. The setup offers real opportunity, but volatility is unavoidable. Understanding these forces rather than reacting to hype is how you can navigate this market wisely. If you found this breakdown helpful, like this video, leave a comment with your thoughts and questions, and subscribe. Let's together make better financial decisions.